Happy Tuesday out there, friends. This is your skipper here, Darius Dale, to present our macro minute for Tuesday, October 4th, 2022. Getting a little chilly out there today. It's nice and fall here. Anyway, starting with asset markets, we have stocks up this morning, commodities up, crypto up, dollar down, global bond yields down, market moving headlines. So return of the doves, not the return of the Mac, it's the return of the doves. So the market's bullish start to the fourth quarter gathered momentum after the RBA, the Reserve Bank of Australia, sprang a dovish surprise, hiking by only 25 basis points and supercharging the debate that the end of monetary tightening is mere months away. Fed speak today. You have Dallas Fed President Lori Logan, New York Fed President John Williams, Cleveland Fed President Loretta Messer, Philip Jefferson, who's on the FOMC board of governors, and then San Francisco Fed President Mary Daly. We'll see if it seems that, at least relative to what we've heard from Fed officials since the September FOMC, they've all been towing the party line. We're going to start to see them break ranks in the coming months once the economy starts to show more visible signs of slowing. But again, we continue to see, at least over the data we've received in the last couple of months, a very resilient U.S. economy. Shifting gears down to Brazil. So Lula, the pragmatist, is working to secure victory in the Brazilian presidential election. So frontrunner Lula da Silva was quick to say that he wants to make deals with groups who did not vote for him as he prepares for the runoff against Jair Bolsonaro on October 30th. Brazilian assets jumped as investors bet Lula will have to water down some of his policies to attract centrists to his coalition. Lula's very much representing the left side of the political spectrum down there in Brazil. His party, the Workers' Party, is already in talks with the candidates who came in third, fourth, and fifth in Sunday's round. So this increases the probability that Lula winds up with winds up as the next Brazil president. Recall that he was president from like 2003 to 2011 or 2014 or something like that. So for a long time. But it may also increase political instability as Jair Bolsonaro has vowed to sort of not accept any election defeat and has already sort of made some implicit threats that he would want his supporters to take to the streets and demonstrate a la what we saw in January 6, 2021. Shifting gears, it's going to be interesting October in Brazil. Lastly, shifting gears to the geopolitical front, Putin is losing support for his war in Ukraine. So you have more Russians fleeing abroad than enlisting in the military since Vladimir Putin announced his mobilization. Defense Minister Sergei Shoigu said more than 200,000 people have been conscripted since September 21st. That matches an exodus of more than 200,000 Russians to Kazakhstan alone over that same period. Yet another 69,000 Russians crossed into Georgia by September 30th, and who knows where else they're heading. Obviously, it's probably not just Kazakhstan and Georgia. So, this continues to be something that we've talked about, which is the likelihood that this Putin loses, the domestic support for this war, in our opinion, only increases the probability that we get more left tail outcomes as it relates to the use of nuclear weapons, the use of, subversive military tactics, i.e. cutting, blowing up gas pipelines, et cetera, et cetera. When you back bullies into a corner, they lash out and they overreact. And so very clearly, just keep your geopolitical antenna up for some left tail, the rising left tail risk, if you will, this fall. Big movers this morning. So the European markets are loving this move in the RBA, the Reserve Bank of Australia, with a dovish surprise. You got 1 year, 1 month Euro OIS down 11 basis points to 2.63%, up 32 basis points month over month. Overnight index swaps are rates on the policy rate, or swaps on the policy rate. So it's a money market bet on where the ECB's policy rate is likely to be in 1 year's time. Euro US dollar up 1% to unchanged month over month. And then lastly, you have the DAX, Germany's DAX equity market index up 3% to down 4% month over month. Shifting gears to my favorite toy is our Longbow dashboard here, just kind of going through some of the key macro markets. So Bloomberg dollar, that is still bullish, kind of in the middle of the range there. Gold, that is bearish. This thing's overbought. So let's just check up on the gold signal here. So this would be a great spot for those of you who have been short gold to be offloading some of that exposure. Those of you who have been long and wrong gold this entire way down, certainly this would be a good opportunity to reduce some of that positions if you are and should be in sell the rip mode, as evidenced by clearly the bearish signal on a trending basis, and obviously the overbought signal here. Dollar still in a raging bull market. We've talked about that at nauseum in our research here at 42 Macro, so definitely check that out. U.S. 10-year, that's still bullish in the middle of the range. S&P 500, that is bearish in the middle of the range. VIX, that is bullish in the middle of the range. NASDAQ 100, that's bearish in the middle of the range. Russell 2000, bearish in the middle of the range. Bitcoin, bearish in the middle of the range. Ethereum, bearish in the middle of the range. Shanghai Composite, bearish in the middle of the range. WTI, crude oil, bearish middle of the range. Get close to the upper boundary of the range there. Let me see what that looks like. Yeah, not quite there on WTI. So maybe we get that final bounce into the potential OPEC production cut that the market is speculating on for tomorrow. They're going to meet, the OPEC Plus is going to meet in Vienna tomorrow here for an emergency meeting. Bloomberg Agriculture Index, that's bearish, fams, in the middle of the range. And then industrial metals, that is bearish in the middle of the range. And then looking at my global macro dashboard, where there's about 300 or so ETFs, all representing individual exposures across, different asset classes, U.S. equities, commodities, emerging market equities, et cetera, et cetera, et cetera. When I sort this thing, I sort it in terms of most overbought to most oversold. So nothing technically overbought this morning, although wheat's the most overbought thing in this broader list. In terms of scrolling down to what's most oversold, in terms of helping you guys find some actionable signals today to transact in today. We want you to make money for free on this Macro Minute program. Simplifies exchange rate up front, the QQD, that is oversold, but be careful here buying this one as opposed to the QQC, which is upside convexity. QQD is a downside convexity. So those puts are decaying alongside the Vanna trade that we called out last week in terms of helping investors, our subscribers position for that. And so you're now seeing that Vanna trade being more aggressively expressed in this particular exposure, the QQD. And then lastly, what else? Coffee here, JO, that's neutral and nearly oversold here. So actually, this looks like a chart you might want to buy here. I don't know anything about coffee except for a lot of people drink it, but certainly, for those of you who are kind of rolling the bones, because again, I talked about this morning. So the average retail investor is very much parroting bear narratives, but their portfolios and their positioning doesn't necessarily reflect that, nor does their investment, the risk management posture. The risk management posture, at least from what I can see, Andy Constant who we're going to have on our macro bundle Q&A program next week. When you look at sort of what's happening from the perspective of investors expecting, he had a poll, investors expected S&P 500 to get to 4,000 or 3,200 first. The poll was evenly split with around 3,000 replies. I mean, that's a pretty, that was shocking considering all the bear porn that we've been, being waterboarded by, if you will, on FinTwit of late. So it's interesting because I think a lot of retail investors in buy the dip mode, they're waiting to buy the dip. But the reality is the Federal Reserve, and this is that resiliency in consumer balance sheets is also contributing to resiliency in the economy, which is contributing to resiliency of core inflation, which is contributing to the resiliency of phase 3, which is tighter for longer in the context of the monetary policy cycle and the liquidity cycle that we're engaged in. So with that, Darius Dale presenting our macro minute for Tuesday, October 4th, 2022. Go make some money being long, coffee this morning. We'll catch you back here tomorrow. Cheers.